David, how you doing? Happy Tuesday, my man.
Hey, brother, how are you?
I am doing excellent. First of all, let me just get this out of the way. Join David's free webinar on June 11th at 4:30 to learn how to find big wins starting right now. The QR code is at the top of the screen. We'll throw the link in the chat there. Okay, so I don't know how much you heard there. I guess I'm just going to start off with this because the last time that we spoke to you, if I recall correctly, you were talking about shorting Apple. Now we got the Worldwide Developers Conference yesterday. Tell me, what do you think? Where are we at? What are we doing here with Apple?
Well, first off, I want to say I agree with you 1,000%. When it comes to their core consumer, I don't think they're going to lose it, right? Their customer's not going anywhere. But when I look at a stock, especially if I'm looking as a short-term swing trader, 2, 3, 4 weeks, okay, where's the market focus? What does the market care about? I think what you're talking about, the difference is I don't think the market cares about that today.
I agree with you.
I think for the story to hold up over the long haul, 1,000% agree, right? They have a monopoly on your time and your presence, and they announced things yesterday that'll continue to make sure that exists. But the market obviously only cared about one thing yesterday, right? So bottom line, I think once we move on from the market only caring about AI and how they establish a presence and maybe have a new growth engine, which is obviously the issue given the multiple, then you're probably right. It's like a $220 to $30 stock again. The question is, and here's the issue to me, if the market continues to grind higher, that happens. But I do believe if we were to have any sort of 5-10% correction, no one's rushing to buy Apple, right? They're rushing to buy whatever's proven themselves via numbers this last quarter, and that's not Apple. So then I think we would see a 10, 20-point correction pretty quickly.
Let me ask you, do you think that Apple ever gets to any point where it becomes the safety trade again, where if the market is selling off, people think, you know what, I'll probably be able to hide or park some funds in Apple?
It's the most predictable cash flow in a way, right? Because of time, it's a more predictable cash flow company than NVIDIA. Is it growing like NVIDIA? Does it produce that type of growth cash flow? But we've seen Apple produce monstrous cash flow, like cash flow we had never seen prior to NVIDIA for now a decade. So yeah, it'll always be a safety trade to some degree. Because I get it, China, their issues, but I don't see them. What happened with RIM, what happened with Nokia, that's not happening here unless they do something really disastrous.
I completely agree. I saw nothing to show me that this is going to go the way of Nokia. And in fact, I actually saw it the opposite way. It's one thing to talk to guys like you and me who are constantly looking for an edge or constantly looking for the next trade, or even guys like me who use a damn Android device and are not going to switch to Apple.
Yeah, I'm never switching. Okay.
But you know what? When I talk to Apple people, I can't even place the last time I talked to somebody that was even partly in the Apple ecosystem that said, you know what, I'm giving this up.
My life would be upside down. I literally would not, like it would be a catastrophe. Yeah,
absolutely.
I don't have the time at my age to figure out how to get off Apple.
Yeah, no, that actually makes a lot of sense. Time is money, especially now. Okay, so David, so let me ask you then, what are we doing going forward using Apple? How are you just not trading it at all? Is this a no touch?
Like a day like yesterday, right? There was a cute short, takes out the low. I think it was like 203.90. As the event's going, they start talking about AI. It's a cute trading vehicle. They take that out, you short it, it goes down right to 201 and like 110. Beyond being a trading vehicle like that, I don't even trade it. Like, don't care. Just, especially when we have small caps joining the party now. There's enough out there to do that, to me, I'll end up missing a good trade that offers a much better risk reward. So for me, it's like, Apple exists, I'll pay attention. But no, I probably won't trade it at all.
Okay. Well, you just mentioned small caps there, so my ears perked up. So I'm going to ask you about that. But real quick here, my chat never fails. I literally just sat here and told you with a straight face that I've never met somebody that's getting rid of their Apple device. And guess what? Our chat is going to prove me wrong. I'm dumping my iPhone in August. Day trader, thank you. It only took one day. It only took one day for that to happen.
That's actually funny.
Okay, real quick. Join David's free webinar on June 11th. 11th at 4:30 to learn how to find big wins starting now. So you had just talked about some small caps there. I'm going to ask you about some more large cap tech stocks here, but tell me about the small caps, because this is one of the things that I'm definitely looking for some bigger moves. What do you got on the radar?
So, and small caps is defined like some people, it used to be $1 billion, $2 billion. To me, the small caps are even these $5 and $10 billion companies, given that we have several $1 trillion companies. So just so you know, I broaden it a bit. So when I look at IWM working, I'm like, oh, okay, take a look at a firm all of a sudden working. Take a look at Upstart's chart all of a sudden working. Take a look at the smaller, less quality names like Archer that's starting to wake up. But more importantly, that's when like stories and fervor get exciting. So we obviously all know about CoreWeave. And last week, as MBIS started to get going, I said, and it was like, it was mid-40s. I said, guys, we have these big events in Paris and London coming up with NVIDIA, and MBIS is going to be making several announcements. I believe this is a new stock now. So forget the fact that it was just, like, I'm sure the people on your chat who bought it at 20, 25, 30, said, I don't even care. I think it's being completely re-rated. And at that time, would I say it's a tiny, a small cap? No, but at the time it was like, say, 8 or 9 billion still. To me, that's small enough. And the market wants that. So I said, okay, they're having a coming out party. This stock's being completely re-rated. And I think it's taking CoreWeave's position for the moment. CoreWeave was plummeting, right? We had that one day last week. And I said, look at MBIS up 7 or 8 pre the events this week. So I'm looking at names like that are having coming out parties that we've been involved in to some degree since the low 20s. I'm looking at a Tempest AI, which previously has been a favorite of ours since, I'm not going to say the lows, about $40, ran to 80. I got light, came back into 49. I got long again, like a month ago, and recently had a big short report out. Really crushed the stock, right? I think it was Spruce. Meanwhile, some of their shorts are like Hims when it was like $10. So take it for what it's worth. But more importantly, that's a bullish catalyst, right? Now you have a big short position in it. So if we do have, and by the way, it wasn't a fraud report. It was like, hey, this is overvalued and this is why, XYZ.
Yeah, so, and actually, if you don't mind me just jumping in here real quick, humongous shout out to our chat, because we actually had one gentleman in here that said, almost like what you said there, maybe a little bit more direct, said that Spruce Point, not the greatest. That happened on May 28th, that report that you're talking about, not the greatest. Give it a few days, I think was the exact term, and it'll be back up. Here's your candle on May 28th. Yeah. That took us to 53. 2 days later, this thing was at 63, 10 points off those lows. So you're exactly right on that. And that gave us a trading opportunity. I guess the only question I have left here, are we going to pop 70 to the upside here?
So if you look, yesterday it started to get going. Here's how I look at it. I always say, okay, what's IWM doing? What's the climate? Are people stretching? And TEM isn't even that much of a stretch, right? It's been working long before IWM small caps. So my answer is yes, this is the exact market where, are we going to buy NVIDIA every day? No, we're going to buy TEM. We're going to buy Rubrik if it goes down enough. We're going to buy MBIS. People are broadening out. They don't have to buy crap companies, but there are a lot of mid and smaller cap companies. So to me, TEM is the exact type of company you start to get interested. That's why like an Upstart, which is in my favorites, just ran up 10 points. Because everyone's like, okay, I bought CoreWeave already. I bought NVIDIA already. Everything had a move to some degree. Where's their alpha? What's still off highs that didn't have a miserable earnings report? We saw Snowflake recently have a monster breakout. That long-term chart on Snowflake, amazing. So I just think those are the names. They're not tiny little companies, but they're not the tried and true Mag 7 names, right? Snowflake, another one, I think has another 30, 40 points in it if this market continues higher, easily. MVD, MongoDB, another one.
That was a great one recently.
But we have this pullback to me at 80 relative strength. I'm not going to say I knew it because I actually bought calls, kind of killed it on these calls. It went up like 70, 80% and held some. If I knew it would just pull back, I would have sold all. But my point is that it was kind of obvious it was overbought. I would have bought a ton of stock and not options had I, not seen how overbought. Now that we've worn off some of this, we're coming into a moving average. If you look, I think it's the 100-day. I'm not looking.
You're exactly right.
I think this is like the perfect area to get long. So It's almost not about MongoDB, but I think that's a perfect example. These are the stocks, the TEMs, the MongoDBs that almost have nothing to do with each other. That's where the alpha is going to come from.
Okay, the really cool thing about MongoDB, we had a great chart set up here. We had this 200 neckline on this inverse head and shoulders. We had the earnings coming up. That earnings pop sent us almost right to the 200-day. We backed off that moving average just like you talked about, and it does look like we might be finding some support here, about another 5 points to that 100-day. You know, the one other stock that you mentioned in there was Affirm. And I guess the only follow-up question I have here, you know, you take a look at Affirm. This has had a huge move recently. You want to talk about another huge move that's related? How about Sezzle? Oh my goodness, another one of the buy now, pay later leaders here. This stock's going absolutely crazy. Does this tell you anything?
I missed the whole move.
Say again, sorry?
I'm embarrassed to admit I missed the whole move.
Let me ask you, you might get another shot at that. Does the buy now, pay laters moving like this, does this tell you anything about the consumer that you then read through to the broader market, or no?
No, and I think it's a little confusing because it's counterintuitive, right? When people use the product itself, buy now, pay later as a concept, you think of it as a positive, right? They garner more market share and more revenue. But when it becomes too popular, it's actually a sign of a slowdown, right? And the key number you really look at is non-payment or late payment. So it's tough. You kind of want them to grow quickly, but not to a level that insinuates we're actually about to go into a monster slowdown. That's how I look at it, because that will always outweigh the growth, because people ultimately will be looking at non-payment and late payment, which, you know, has a disastrous effect for companies like this that are somewhat leveraged. Yeah. So I don't read into it too much, especially because if it grows too quickly, usually it means they're not going to get paid on a lot of that business.
Yeah, and that's kind of what I'm going to here. You know, like if more consumers are using this, how is their financial situation really? N here from the chat says, buy now, pay later on food delivery.
Yeah, I didn't like that line when I saw that. I saw that 4 weeks ago. He or she is onto something. And by the way, within that article, it said a lot of those people are paying late. That those same people using it to buy food are paying late. So no, that's not that bullish long term, right? Even though the stocks may like it for a day or two. So you have to take it with a grain of salt.
Okay. I see what you did there. Grain of salt on food delivery. Absolutely love that. That was very, very well done. Okay. The other thing that I wanted to ask you about real quick here was going to be Meta and NVIDIA. You had talked about these before. I know you just talked about maybe diversifying into some other stocks that maybe aren't some of these large caps. Are you doing anything with these at all? Is the trade just kind of over? What are your thoughts on some of this?
My exact book. Those were two of my largest holdings by the first week of April, right? April is past, so it's not like a victory lap, but that's where I saw meat on the bone. I'm like, wow, this isn't 10 or 20%. I might make 50 or 100%. So NVIDIA I bought aggressively at 86 and 93. Did I sell and hold it to 140? Not even close. About 115 to 125. I was out of all. And Meta at 480 to 500. Same thing by METU. But by the time it was 575, 600 out. So the answer is, as trades short, but to quote myself, what I said, and we've played it a couple times, I'm not in it now, as I said, with NVIDIA hanging around 140, trying to figure out if it needs to pull back or actually test those highs. I said, and I said this on my chat, I said, some of you are going to get pissed off, but this is how I feel, and I feel strongly about that. About this. AMD at 110 is not the quality company. It's not the earnings growth, but it is positively, in my view, a better risk reward over the next 3 months. Sure. If you're strictly looking at gains versus potential losses, then NVIDIA. And I have to be careful because I'm like, oh, some people, but that's how I look at Meta and NVIDIA. It's not that there's anything wrong with them. Is there 20% versus 10% on the upside without the same downside? And with AMD, as an example, having a new buyback, an added buyback, insider buying, and a quarter that wasn't miserable, and trading, you know, if you're old like me, you know, AMD's never been cheap. Since it was 5 and it ran, it basically has always carried like a dumb multiple, 50 to 100 times, right? All of a sudden it was trading under 30 times, And even that partially because things aren't going great, but it's just set up better. So what I'm doing with Meta and Nvidia is nothing. When they pull back, they'll probably get aggressive again. But here it's like neither here nor there. It's, oh, AMD is an opportunity. And that's how I'm looking at those two specific names.
Okay.
But Meta looks great, right? Trying to get over 700 this morning, and we had that AI news. So there's nothing wrong with Meta.
Okay, so it sounds to me like you're taking, we're big hockey fans here, at least I am. I shouldn't speak for anyone else. So you're taking the Wayne Gretzky approach, skating to where the puck is going rather than where the puck has been for the last 6 months.
Well, yes, because why do I care about the next 7 or 8 points in Nvidia? It's $140 stock. Do the math, right? So now if it were to pull back towards 130, I start to get excited again. So that's simply how I look at it. It's try and look past, is it a great company or not? And just look at risk reward. That's all I care about.
Okay, I think that's real smart. Real quickly here, good question from the chat here. Ryan, if buy now, pay later is a trend, what do you think about the Chime IPO on June 12th? Have you thought about this at all?
Yeah, so a couple of my buddies are, like smaller hedge funds that just play these deals. I mean, I hear nothing but pretty good things, right? So here's what I've learned, right? There's certain points with the market where all that matters is how the book's set up, right? Is it 4 times oversubscribed? Is it 20, 30 times? All I'm hearing is pretty good things about every deal. Here, let me give some added value from a guy who's one of the top IPO players in the business. 1 second. Would this be good? I'll give you a recent update. Okay.
Oh, absolutely. We'll take this all day.
All right, so let's do this. Chime. So we're hearing 10 times oversubscribed. The sentiment's been mixed, but we do view it as a must play in the recent IPOs. We think it's priced to work on day one, given the strong subscription levels. Voyager, we're hearing 18 times, looking very strong. ASIC looks okay. There was one people are less excited about, but it's not those. But anyway, those 3 deals, which are all, over the next few days, all looking pretty strong. And I'm trying not to outthink it and be like, the quality's less there. Because look at what just happened with Circle. The appetite is there. There hasn't been deal flow in forever. That's part of what's happened. Look at what just happened with CoreWeave when it got going. So for right now, people want new paper. It's been a lot of years without IPOs. So most of these are going to work short term.
Yeah, that's real good stuff here. This CoreWeave one, I actually talked to one of my buddies who knew another buddy who had some type of connection to all of this. They said people were kind of disappointed initially, and then look what the thing did. Look what it did.
I mean, what launched it though, right? That perfect base, taking people out that are not long-term owners. Oh, it didn't work so good. It's soft. And those are the best setups in many ways because no one's left but true loyal shareholders. So you get that first quick move. There's no selling. They already sold. The people who were antsy, they sold at 40, right?
Okay, real good stuff there. And this is very serendipitous. Thank you for doing this. You're now the second, you said this comes from a top IPO player in the game. This is now the second time this week that I've heard good things about Voyager, ticker VOYG. That IPO's tomorrow. So stick that under your hat. Okay, David, really good stuff here so far. Is there anything else here that maybe I didn't ask you about that you want to cover? Anything that you're looking at, setups, anything like that at all?
MBIS really was important to me. AMD. Okay. The one I didn't mention is, bottom line, small cap biotech has been underperforming since President Carter was in office, right? It's really been disgusting. As IWM works, there's a good shot XBI might make its final move towards the 200-day and maybe make a gap move towards 90. It just, as a betting man, if small caps are going to work, it really feels like it's time that small cap bio also joins the party. We're seeing a lot of mergers, tons of cash out there. Is it my number one go-to play? No, that would be MBIS, that would be the AMDs, that would be the TEMs. But you have to pay it. If you're looking for alpha, what hasn't moved yet, XBI has some very real companies in it, and it's not doing particularly well, not only for the year, but for the last 5. So I think you can look at that and look for 90 or 100 during this summer.
Okay, so a couple of things. I believe the seasonality right now during the June month is quite positive for XBI. I don't have the chart in front of me.
It might be number 1 or 2. You're
okay. My memory's working here this morning. That's good stuff. I also think that you talked about XBI the last time you came on with us back in mid-April.
I don't remember, honestly. Very possible I might.
Very possible, but it's also very possible that it's up 10 points since then. So really, really good stuff. Okay, David, great stuff yet again. Join David's free webinar on June 11th at 4:30 p.m. to learn how to find big wins starting right now. QR code at the top of the screen, links in the chat. David, thanks so much.
Right guy or girl, so it just seemed like they were asking good questions, so I want to answer. Given the market cap, I know this is going to sound crazy, but I think there's room on MBIS to $75 or $80 easily. If you really look at it as a market cap and what they're doing and how much of a powerful place they have in Europe and AI and the full infrastructure, if you look at CoreWeave, to me, it's grossly undervalued based on CoreWeave's valuation right here. So I can see a 50% move in stock price even from here.
Okay.
Thanks,
awesome
guys,
stuff.
appreciate it.